In this presentation, we will record factory overhead that will be applied to jobs within QuickBooks Pro, QuickBooks Desktop. Here we are in our practice file, one job cost tracking work in process. We currently have the open windows open. You can open the open windows by selecting the view dropdown and the open windows list. We're first going to take a look at our objective by looking at our Excel sheet. Our objective now is to apply the third component of the work in process, the job, which is the overhead. And this is the most confusing kind of component because what we're basically saying in the job is we're going to say, hey, look, I'm going to put our major components here. That means the direct labor and the direct materials. These are the two direct major components. We need those into the job because that's going to be driving the cost of the job for the most part. Then factory overhead is going to be all those types of things that we want to assign to jobs, but we don't want to take the time and effort, or we don't know how to assign them to the particular jobs. So something like a supervisor that supervises all the jobs but doesn't work on one particular job, then we might have to allocate his time or her time to the jobs in some type of way. We might have something like if we buy small materials like grout or something like that, nails or something to the jobs, then we're not going to basically tie out each nail to the job and whatnot unless we think it's going to be significant. What we're going to do is we're going to estimate in some way how much those costs that we had for those types of things, we're not going to tie directly to the job in some format. We're going to call that overhead. Now, the traditional way that we would think of as overhead, anything that's basically in the factory, like depreciation on equipment that we use for all different jobs or something like that, we're traditionally going to use a predetermined overhead rate. And so that's what the concept we'll think about right here. So what's going to happen is we haven't recorded anything to overhead in this time period yet. We will record the actual cost to overhead soon. And that's going to be the indirect materials, the utilities on the factory, let's say where we make something, rent, depreciation on equipment. All those types of things we're not applying to a particular job but should be part of the cost of the job will be applied to overhead and then assigned out to the work in process. Now, the reason I would think about it going that way, going into the factory overhead and then being assigned out to the work in process. However, it may not basically work out that way, right? We may actually assign it out to the work in process before we've incurred all the overhead. And therefore, this is going to reflect that. That's in essence what we're doing here now. We're actually recording what's going to be assigned to the job for overhead using some activity base, that activity base in this case being the work, the labor. And so in other words, we're going to estimate in some way how much is going to be applied to the job. We cannot just take, for example, the 3 jobs here and say, I'm just going to take these 3 jobs and divide it by, the overhead by 3 to the 3 jobs because the 3 jobs may be 3 different sizes. So the question is now, well, how can I allocate then the costs that I don't know how to allocate directly to the 3 jobs? I have to use some type of estimate. And the activity base is the percentage type of estimate that we would typically use. And this would be kind of a predetermined rate that we would allocate to the job. Now, we're going to use this method this time, this basically predetermined activity base, and we'll see how it's going to be just an estimate. And then in future presentations, we'll do some other kind of methods to apply out the overhead in a more direct fashion, just to show different ways that this can be done. So in this case, what we're doing here is actually saying we're going to take it out of factory overhead, even though there's nothing in it yet, allocate it to the jobs, which means we're going to allocate it to work in process. So taking it out of factory overhead, increasing work in process, then supporting that transaction by the job. And then in later journal entries, we'll actually see the factory overhead increasing. The difference between the allocation out by the job and the actual overhead will be reflected in here, and we'll have to account for that at the end of the year because it will be an estimate. Okay, let's see what that'll look like. For the general ledger side, we're going to say that work in process is going to be going up by that third component, which is the factory overhead. The factory overhead is going to be going down. The amount is going to be equal to and let's calculate this over here in our job sheets first. What we have is a predetermined overhead rate of 50%. So what that means is we've calculated based on prior year numbers and projections that the labor is what we're going to use to drive the factory overhead. And this is just going to be an estimate. We're going to say this was our labor costs. And you can see that they change per job. what we're going to use is that labor cost in order to assign more to job 14, or for example, job 16, than to job 14. Because there's more labor, that's our activity-based driver to assign the higher level of cost. So all I'm going to do is take this 30,000 times 0.5, and note that this factory overhead has nothing to do necessarily with wages. We're just using wages to determine which job is larger and smaller. So we're going to take this number times 0.5, and then we're going to take this number times 0.5. Now, if you don't understand this predetermined overhead rate and you don't possibly want some easier method, we'll discuss other methods later, but this is kind of the traditional method that would typically be used. So now we got the 15, the 34, and the 65 that we're going to be applying out. So if I go back over here, we're going to say this is going to be equal to, and I can actually take these numbers from the job. I'm going to say this plus this amount. And that's going to add up to the 109. The credit is also going to be 109. Posting this then, work in process is going to be going up once again by the 109. The factory overhead then is going to be going down. There's nothing in it right now, so it's actually negative. We're kind of overdrawing an overhead because we haven't applied anything. That could be typical because note, some of the overhead is going to include things like we said, depreciation, some of these things that we don't record till the end of the time period. That's why we kind of have to use an estimate, to do it as properly as possible. So in any case, we're going to go back over here and we're going to say now our work in process is at the 760,000. If we add up the work in process here, it's going to be this plus this plus this. That's going to be the 760,000. So now we have our general ledger now being supported by the job cost sheets. Let's do that in QuickBooks now. So back to QuickBooks. How can we do that same thing in QuickBooks? Let's take a look at the report first. Reports drop down. We're going to go to the accounting and taxes and the trial balance. Within the trial balance, we'll change the dates up top from 01/01/20 to 12/31/20. Here's going to be our trial balance. What we want to do on the GL side is increase the work in process and then have the factory overhead account, which we're going to have to add, go down. Notice we're going to have to use some type of form, and there's nothing happening to the checking account this time. So we're going to have to then, once again, go back to the Home tab and use our forms in such a way that's a little bit unnatural. So, and that means we're going to be creating a check again with a zero balance in it. So I'm going to create a check, and I'm not even going to write it to anybody. I'm going to make the check date as of, let's see, 1/01/16/20. And then it should be a zero balance check. Once again, we're in the item side of things. We're going to put the item to factory overhead. The amounts we're going to break out by job again. So we're going to go to the cost. That's going to be the 15,000, and that's going to be for job 14. Then we have factory overhead, and the cost is going to be 34,000. That's going to go to job 15. And then we're going to have factory overhead one more time, and that's going to be for the 60,000, and that's going to be for job 16. Those numbers came from our calculations over here where we took 50% of the labor for each job. That's our predetermined overhead rate. So that's going to give us our total of 109, but we don't want the checking account to be going down by 109. We want the other side to be going to a factory overhead type of account. So this can be a little confusing because of the names. This is the name of the item. Where's that item actually pointing to? Let's check it out. If we go to the lists up top, if we go to the item list and we take a look at the factory overhead item, it's actually pointing to work in process. So don't get that confused. So I'm going to close this back out. This is not an account. This is the item, factory overhead, which is pointing to the account, meaning these three amounts totaling 109,000 will be recorded to the work in process, increasing or debiting the work in process. The other side would be going to checking, decreasing the checking account now, but that's not where we want it to go. Therefore, we're going to go to the expenses side. Where do we want it to go? We want to go into the factory overhead, other current asset account, which we're going to have to make. We haven't set one up yet. So we're going to call it factory overhead tab, set up that account. It's going to be an other current asset account, other current asset, and continue. and that looks good. The amount is going to be negative 109,000. And that's it. So now our check goes back down to 0. What's this going to do? It looks a little bit funny again. What's it going to do? Well, the item over here says factory overhead, but that's an item. The item is actually driving to the account, GL account work in process, and assigning to the jobs as we have listed here. Then the other side is going to be on the expense side, going to factory overhead, not an item though, this being the actual account, which will be going down by the 109,000. Let's take a look at it. If we say save and close, yes. Take a look at the trial balance and say, don't show me that again, please, and refresh that. Then we have the factory overhead. Now, other current asset at the 109, it's a negative. That's a credit. That's a credit like we're showing here. It's a little bit different order because of just the way the QuickBooks will order the accounts, and we're not using account numbers, so that's okay. And then we have the other side going to the work in process. The 760, that matches the 760 here. So the GL side looks good. If I double click on this item, we see the detail for that amount we just recorded. If we double click on any of those three, we see the check, and here's our three amounts down below. Closing this back out, closing this back out. Now let's check our job reports. Reports up top. We're going to go to the jobs reports. We're going to then go down to the summary report. We'll take a look first at the bottom line for the actual numbers is going to be the 760,000 back to the trial balance. We see that ties out here, so that looks good. Back to the job reports, it's broken out by the 186, the 314, and the 260. Go into our Excel sheet. 186, we got the 314 and the 260. So 183, 260. If we took a look at one particular job, then reports drop down. We go to the jobs reports, and then we go to the actual detail, estimates versus actual detailed report. Let's take a look this time at job 16. Okay. Then we've got the cost, 120, 80, 60, labor, material, overhead, respectively. Cost here is for this job, 80, 120, and 60 for a total of 260. Back to QuickBooks, that's the total 260. So everything looks like it's tying out as we would expect.